Good morning, guys. Richard here, and welcome to Monday's Morning Bell. Sorry, I was just fiddling around here with the computer. I've got three screens going. Something happened with the live stream on YouTube, but that seems to be going. So, guys, I hope you all had a fantastic weekend. It's been a pretty volatile past Friday. Obviously, with Fed Chair Powell's comments that they'll start thinking about decreasing the interest rate hikes until they're confident that inflation's been tamed. Now, wherever that's going to be, who knows? Markets didn't like that much, came crashing down. Well, I won't say crashing, but pretty steep declines we've seen across the board on the ES, NQ, and gold as well. So, yeah, difficult to say. I mean, we'll look at the ES and NQ now. Unvalidation zones or lines or levels, sorry, are still intact for the bullish bias that we've been talking about. But we might have to start seriously thinking about the bearish bias. So we'll look at that just in a sec. Quick thing, this week on the economic calendar will be Friday's jobs numbers. So that's been pretty resilient during these times with the high inflation, all that sort of stuff. But don't really see anything else much happening on the calendar this week that could potentially have the same sort of effect than Fed Chair Powell's comments did. So whoever, we'll see what happens. And let's quickly jump into the charts. Again, as always, guys, if you have any questions, please feel free to ask. Drop them there in the chat box, either in Skype, in Zoom, or in YouTube, and I'll be more than happy to answer them for you guys. All right, so where are we at? So, ES, we had the support zone that we identified last week, which is also to do with a high volume node that was present over here on the volume profile. We'll look at the volume profile in just a sec. Price declined. We were saying that we potentially have, and we might still have, it's not over Cadovers yet, potentially seen the end of a third wave there, with a fourth wave still underway, and then a fifth wave. Well, that being said, who knows now? I mean, that's been an insanely strong decline that we've seen. Even gapped lower today. Been a pretty tight trading range over the Globex session thus far. But, you know, as long for this bullish account, as price stays above 3,950, this is still a possibility. Although, yeah, been a very, very strong decline. Same thing on the NQ. So I'm just going to remove that for a sec. We'll really need to start seeing a lot of buying interest coming in here. But I'm really starting feeling wary about this being a fourth wave decline. Alternatively, although I can't really count that nicely, because this looks like a beautiful five-wave move to the upside, is that this was a third wave high, or the fifth wave high was already here with a third wave here. Let me just mark that out. That's starting, it looks less likely to me that that was the case. But, you know, could still be a viable explanation of what's happening now. They might even see a deeper decline, but I don't like that count. This has been incredibly fast decline. The thing is, and during volatile periods, it's not uncommon for price to just immediately reverse back to the upside. There's many instances we've seen where we've seen a strong decline immediately followed by like top of a V-shaped bottom sort of move, with prices immediately reversing back to the upside. So, guys, don't really have much to say here. We really need to break above this zone again for me to say that we're going to potentially see that final fifth wave and then potentially decline and then a move to the upside. Remember last week and the week before, I was saying hopefully what we've seen over here is not similar to what happened over here. And now we're going to see one hell of a start of a much deeper decline. Could eventually potentially move way lower than the June lows. But like I said, line in the sand, very, very close on the ES 3,950, right? So are we going to bounce higher now? Very difficult to say buy into something after you've seen such a strong decline. All right, just quickly, I want to look at the volume profile during this move to the upside. Up until this high. You see, we also had a high volume area close to where the previous support zone was. Obviously, price break low. Below that is quite a large void underneath here on the volume profile. Price drop lower, so it's potentially could even move a little bit lower. Maybe it's going to fill this gap that was left behind between Friday's close and today's open. So yeah, I think if we do hit lower, these 3,950 levels probably going to be taken out or tested. And then that would invalidate this whole bullish move to the upside. Unless this is a small ABC that we've already seen, but we'll see how aggressive the sell-off was if you move to a smaller time frame like the 4 hour. We had a bit of divergence in that support zone previous as well, as we all know. It didn't hold the support zone, so straight down to the downside. Okay, that's gone now. Very steep decline, and that happened very quickly as well. So for this to be a ABC for a fourth wave correction, price will, like I said, have to stay above this area here, right? And immediately start pumping to the upside. If that's going to happen or not, who knows? So yeah, sort of difficult saying where price is going to go and what levels we should be looking at, etc., etc. So yeah, difficult one. Probably by Wednesday, we'll have a bit of a better idea. Is this level going to be taken out, invalidate that bullish count? Then we have to start swapping to the bearish count, unfortunately. All right, let's not mull too long on the ES. Let's have a look at the NQ. I'm going to switch back to the daily time frame. Similar sort of price action, right? Strong decline across the board, actually globally. Even here in South Africa, price came down very, very strong on our index. Same thing. Here, though, price was sort of in that support zone we identified previously. We had a bounce higher. We said we also need another move to the upside to potentially count this as an A. Leading diagonal B, a 3. 4, we thought it would be potentially at this median line that didn't hold, and bam, it moved lower. Could still be a fourth wave for as long as price stays above 12,262. That looks not likely, but you know, anything can happen in the markets. Same thing here, a little bit of a gap to the downside. So yeah, difficult one, guys, difficult one. These could potentially be ABCs to the downside, but geez, like I said, I'm not a fan of. I'd like to see a steady decline into a low and then try to take a trade to the upside. So obviously the bulls will have to come out of the woodwork today, if we can say it like that. Really push this to the upside, but looking a bit negative, right? Let's just get the pitchfork out here and overlay it on what could be a zigzag here. Just get rid of the put the snap mode on. If we go from that high, boom, low, lower high. Price reached this low red warning line. Picture perfect touch, and it is just been running sideways. Very small trading range, like I said. Still got a little gap, so maybe we'll see a little bit of gap for those guys that could potentially want to trade this to the upside on a day trading time frame. Let's get my labeling tool out. That gap on the NQ, 12,557. Am I right there? Yeah, that's actually the low. 12,557. Now, these gaps generally get filled. Whether it's going to happen today or not, we'll have to see. A little bit of resistance in the form of this median line running to the downside. Like I said, at previous touch day, small trading range. Potentially, this could be a target. Maybe if these highs on the previous 4-hour bar gets broken, could have a quick, fast move into 12,557. But on the NQ, a little bit closer to that invalidation level than the ES. So, very strong drop. You know that saying, it's difficult getting in front of a bus, or falling knife, as they call it. Yeah. So again, here, guys, not really much to say. Could still be a potential fourth wave corrective move, but yeah, needs to find support ASAP. Whether that's going to happen or not remains to be seen. All right, so not much to update really, guys, except for gold. We'll talk about gold in just a sec. Let's have a look at crude first. Crude's just been as messy as ever. I still think that there's downside potential in crude. And like I said, we probably want to see the 97.87 sort of level hold. Otherwise, something else is going on. And the reason why I said this, and there's a lot of lines on here, I do apologize. I'll try to explain what they are if you're new to this, these sessions, is that this was a potential A, very messy A, B, C for a B. And we were expecting a potential C wave, or for crude to really start getting going to the downside, for an impulsive third wave sort of behavior, but we just haven't seen that third wave behavior just yet. It's been very messy. Again, not an ideal market to trade on smaller higher time frames, like swing trading time frames. But that being said, if price does move higher from here, and the fact that price failed to take out these highs at this instance over here, and recently price failed to take out these two lows, the May and April lows of this year, and reverse back to the upside, carries for me the DNA of what could be a triangle. Let me just get rid of a snap mode again. Come on. There we go. Sorry. A very large triangle that could take ages to complete. It could be asymmetrical, it could be ascending, or whatever the case might be. So I think price clears above this level and triangles, the internal waves of triangles. Let me maybe label that out for you guys quickly. Runs in A's and B's. Let's say this was a C, then you're going to get a D, and then you get an E, and then price moves higher. Right? Now, the internal waves love the Fibonacci retracement levels. Let's say this was a C wave. Then we could see quite a deep retracement to the upside. If that does occur, so I'm saying the early signs of this potentially still being or could be a triangle, it's too early to say for sure, because you always have to assume that you might see a D wave. You know where D waves typically like to end, which is in this case in a very volatile environment, potentially going to be 61.80 or even higher at 78.6 for crude. You identify a zone. If you get a reaction from that, then you have a high probability triangle. Price could just reverse lower from here and continue to decline. So, yeah, a bit early to call the triangle idea, but it's not impossible. I think that is a reality. It could still happen, but then at least we'll have stable prices for quite a long period of time. This could take ages to materialize. That being said, is too early to say for sure. Well, nothing is for sure, but you study these patterns, you quite often know what they behave like and which levels you want to be seen eating. So price is pulling back to the center median line of this green pitchfork that's showing the slightly sloping to the downside. This could actually be a resistance area. So I think if this previous high gets taken out, the high of last week on the set on the 25th, we might see that move back to 97.87-ish. Could probably adjust it a little bit lower. Yeah, yeah, 97.80 didn't make much of a difference. So, yeah, up and down, up and down, up and down, very messy. So, yeah, I still think that crude oil can move lower. I still feel that these 84.48 and 83.65 levels, let me just open this chart up a little bit, are still attainable. But it's just been this up and down zigzaggy sort of movement. Maybe it's still grinding low in some sort of either leading diagonal or some sort of ending type diagonal. So, well, how would we know that price is getting ready to move lower on crude oil? Well, it's the same levels I showed last week, Friday, 90.22 or 88.52. That zone needs to get broken to the downside. And I think if we get a close below the zone, that there's a high probability that we'll see a continuous move down to 84.48 and these lower levels, which are just these lows that were set on 11th of April and on the 15th of, what was it, March, yeah. Below that, we got the 79.81 level, which is basically slightly above this lower median line of this pitchfork sloping to the downside. So yeah, we'll just have to wait and see. But for now, like I said, in swing trading perspective, I see resistance 97.80. See reaction to the downside. Great. Maybe a break below Friday's low. We'll start setting this off to see those lower prices that we're still hoping can be reached. All right, how are we doing for time? We've got 15 minutes left. Gold. Oh, and I got this new hand dryer installed in the bathrooms here at the office, much to my dismay. So it's making quite a bit of a noise when I'm busy presenting. So I'll have to have a bit of a chat to the landlord here, but we'll see what happens. So yeah, sorry, I'm digressing. Gold. Now I've been looking at this move to the upside and lower time frame. We'll get to a lower time frame in just a minute, but we're tracking or use a shift pitchfork using the most prominent 3 anchor points prior to the strong move to the downside, and that's from that lower high that we've seen in March as well. We initially thought that we could definitely count 5 waves here. 1, 2, 3, 4, 5. Thanks, Jason. Jason saying that he couldn't hear the hand dryer, so that's great news. I can hear it really clearly. But in any case, guys, so same thing here on gold. It's starting to make a 5-wave sequence to the downside. So I think this whole thing that I thought that we've seen a bullish move to the upside is really being questionable. And what I mean by that is, if I switch to a 4-hour chart, let's give that a few seconds to load. Switch off these divergences again. Then there is a slight possibility that we've seen a WXY, or what they call a double zigzag corrective move to the upside. Either that or this 3-wave behavior that we've seen previously still means that we've seen a 1, 2, 3, 4, 5, i.e. a, let me get the snap mode off again. 3-wave move to the upside, which is actually corrective, and then 5 waves to the downside, which we've just seen. And then that's it, and price is going to shoot back to the upside now. But if that is the case, then price has no business, if this is a 4th wave correction, to have moved into the highs that it just basically broke. Let's put an arrow line, or let's put that on again, snap mode on. Boom. So, difficult one here. Looks like we're getting a nice strong bounce at the moment. We'll see if that can last. But again, this is how we were counting it previously. Potential 1, a 2. We were thinking this is a 3rd wave, an ABC, 5 waves to the downside. But 4th wave should not pull into the area of the 1st wave, which it clearly did. So that for me is off the table, that this was potentially a 3rd wave high. And I think this three-wave move that we've seen to the upside here is extremely clear. If you have an end of a, let's say, a trending market, up or down, expect a five-wave move before you get a decline. This is, in my opinion, a clear three-wave move. So this brings in to question whether this was a corrective move that we've seen. I just think this could be a WXY, and what I mean by that is that this was potentially an A, a B, a C. Let's just get that label out of the way here. With a much smaller ABC. So basically two single zigzags, as it's called, connected by what they call an XWX wave, and the entire pattern's called a WXY or double zigzag. Basically just two zigzags after each other. Because now we got a clear five-wave move to the downside. So this really does seem like we potentially now bouncing or getting close to a bounce or some sort of corrective move to the upside. Could be a more complex move and then followed by another decline. That's my feeling. Again, whether this happens or not, we'll just have to wait and see. I did have, what else did I have on here to show you guys? Let me just get that to a standard pitchfork. Yeah, this is the pitchfork I had on last week. Sorry, again, lots of lines here. We had a beautiful touch of this lower median line, boom, straight up. It touched it to the T again, and now we're getting another strong move to the upside. So I'm thinking that we could potentially see, I have some levels going there, and move back. This looks like a beautiful five-wave sequence, or either an A wave that could potentially move higher, retrace most of this decline to the downside, potentially see a bounce upwards of 1762.5. I think if we break these lows again, then it really would reinforce this idea that this was a double zigzag to the upside. Right, I want to get rid of that for just now. Again, guys, it's not much of an update since Friday's session that we had. I did say that markets potentially going to be quite volatile, and we've seen both the ESNQ and the gold move strongly lower. So we'll have to see buyers come in here and support this market, ASAP, because we're so close to those invalidation levels for the bullish counts on the ES and the NQ. So it's going to be interesting to see where we stand by Wednesday when we do our other session, or our next session. So very, very, very crucial those levels hold for the bullish counts. Otherwise, we'll have to potentially start thinking about the bearish possibilities in both the ES and the NQ. So gold, what's this corrective? Am I completely wrong here? But before I end things off, it does look to me like a clear five-wave decline here. Impulsive third, fourth, and the fifth. All right, so I think if we do get a bounce, it's potentially where it's going to be from. And it might be that we see some sort of behavior like this, and then a much stronger decline to the downside. Again, this three-wave move to the upside is still bugging me, so the only way this can remain bullish, in my opinion, if I'm completely wrong about this entire thing, this looks like a beautiful five-wave decline, is that if this still is some sort of what do we call an expanded flat, where your C wave's got three waves, then the only thing that I can see is that this was a 1, a 2, a 3, a 4, and a 5 somehow, with one hell of a massive. Just count that again. Being a 1, A, B, C, three waves, A, B, C for your B wave, and then 1, 2, 3, for 5. And now we're going to get one hell of an insane move to the upside. That's the only bullish interpretation that I do have, but this third wave here, very short for this initial move to the upside. Not impossible. I've seen this happen before, especially in commodity markets. So it is a possibility. For now, I think 17,762-ish, give or take, is attainable on gold if this 5-wave sequence holds, and whether we're corrective or not, should probably have a decent idea by Wednesday or Friday this week. See how this price action has materialized by then. Right, guys, that concludes today's session. Thanks so much for joining today. Are there any questions? And please do drop them there in the chat box, and we'll be more than happy to answer them for you guys. A little bit of a shorter one today. Thanks as always. No worries, David. You're more than welcome. But like I said, prices are so close to these levels we determined previously that they need to hold. And we'll only have a better idea by Wednesday or Friday, like I mentioned, to know whether, if is this, are we turning bearish again, or whatever the case might be. So not much to say, guys. I do apologize for that, but it is what it is. It's what I see on the markets. And yeah, thanks very much for watching, guys. And as always, I hope you have a fantastic rest of your day. And I'll be back again on Wednesday with another session. Same time. And take care that side, and goodbye.